Welcome to Value Validate, where we evolve the timeless traditional principles of various value investing icons with cutting-edge technology. My background is in data science, but I am currently portfolio manager at Sage Seeds Capital, as well as the handler of our Sage Seeds Artificial Intelligence, which fully invests our portfolio. Heading into the new year 2026, I find myself able to commit more time towards this YouTube channel. I'm happy to say it's been a while since we've had a video completely flop, and generally speaking, the channel is growing. That does mean I'm going to be dedicating a couple more hours every week to making these videos. Unfortunately, I have felt for a while that my videos on this channel are a tad rushed. One friend of mine that watches these videos and gives me feedback said, "The meat and potatoes is here. The research is researching," which makes sense. That's literally my day job. And I think using this extra time in 2026 to schedule more recording sessions or editing, I'm hoping those things go a long way towards reducing the rushed nature of my content. And so if you clicked on this video, you've seen 3 logos, 3 businesses grace the thumbnail. Those are the last 3 deep dives we have published on this channel. Each one of those an actual recommendation from our Sage Seeds Artificial Intelligence. But once a month, we follow the technicals. Like I said, we're very modern value investors. And while we don't let price tell us what to do at all, that also doesn't mean we ignore price completely. The way this works is I'm going to go over the last 3 deep dive companies. It's been 1 month since the first one, 3 months since the last one. Because we limit it to 3 companies, the last company, which today is Mercury Corp, prime market position in California. Well, this is the last video we're going to be talking about that one. And so I'm going to peel back the exact buying and selling journey that we went on at Sage Seeds Capital, showing you what a professional shop actually did step by step in order to complete a trade and track it. Let's dive in so that your wisdom can blossom.
This video is intended for educational purposes. Opinions made by me or the Sage Seeds AI are not investment advice.
Starting with Gulfport Energy Corp, we're about 1 week into the new year. And a big push, frankly a quite rude push, down to the 200 simple moving average is what we're going through right now. Now, unfortunately, this big red bar happened on a very high surge of volume. There's only been 3 of those in the last 12 months. But we need to remember, and of course our deep dive video on Gulfport Energy covered this in detail, this stock is essentially the best version of a natural gas extractor. But in this oil and gas exploration and production industry, any ownership of one of these businesses, these extractors, is fundamentally betting on the price of the resource they extract. In the case of Gulfport, that is natural gas. Popping over to the future section of this website, finviz.com, well, the Santa Claus rally, quote unquote, was completely inverted in natural gas. In fact, up here you can see in the little previews across all energy commodities, the price of energy is declining. No one knows what it means, yada, yada. Now, most of these graphs, pretty much all of these futures, are not declining something crazy. It all could be explained as just natural, reasonable levels of volatility. But I will tell you that around this 350 to 310-ish level, several natural gas producers are going to be genuinely struggling, bleeding money until the price raises again. Fortunately, that will not happen for Gulfport Energy. Again, the deep dive will give you exact figures on this, but Gulfport Energy has a very low cost per barrel. And so stepping back, is this a worrisome drop in price? Well, it's certainly not a comfortable drop in price. The history of this stock is one of volatility around exactly this range. What it means is, to me, is that what appeared to be quite possibly a candidate for a genuine breakout out of a pretty sizable consolidation period did not quite manage the breakout and is now being once again sucked into its consolidation range. But Finviz here suggesting that the channel is not broken until way down here around the 175-ish area. And I would actually agree in this case. Gulfport is in the final stages of its consolidation. It is massively undervalued. Unfortunately, it's just pretty much impossible to predict when the breakout starts, but definitely not impossible to be prepared to take advantage when the breakout does begin in full effect. Our second company today may be the gem in our mind in terms of what is available in emerging markets. Right here, you see it's a financial company, a bank in Colombia, South America. Yes, it actually is the largest bank in Colombia by a significant margin even. In some ways, this is a bit like the JP Morgan of Colombia. However, that metaphor does have its limits because, and like always, the deep dive video talked about this at length, Grupo Cibest is a conglomerate that basically has 2 or 3 amazing startups in there. I mean, if you've heard of PayPal, imagine if JP Morgan owned PayPal. If you've heard of Kraken and Coinbase, imagine if JP Morgan owned PayPal, Kraken, and Coinbase. Now you're starting to get a more accurate metaphor of what this business actually is in its market. And technically, the markup has clearly happened from around a range of maybe $40 to $42, clearly marked up to above $60. We're talking $60 to maybe $64. This consolidation, and then what then is now a clear second consolidation. And once that, literally as we're recording this video, this is looking like a clear push upwards. Very interesting to me is that the old marking up channel, well, very recently, that blue line right here has surpassed the purple line, which would be the 20-day simple moving average. Now, in short terms, what that means is the upwards trend has caught up to the latest consolidation period. And we didn't know we were consolidating back in November. We didn't know in December. In December, maybe it started to be on some people's minds, but certainly throughout the month of December and over the last few weeks, almost anyone watching this, anyone investing in this is aware that we're in a consolidation range. And right now at the beginning of 2026, very fortuitously, Grupo Cibest investors and traders need to decide if we're going to continue the markup period. Now, luckily, the earnings report in November, in my opinion, more than gave the market enough fuel to come out of this consolidation with a bull rally on our minds. The PE ratio is once again trading below 10. What I have found on this stock is that the stock likes to trade at least a multiple of 10, usually speaking. Of course, that is not the sort of predictions I am accustomed to making. But one thing which isn't a prediction, which is just analyzing the chart, is that this looks like a very healthy consolidation. And if this push upwards holds, an almost picture-perfect setup. Now, scrolling down here and focusing just on the forward PE, today it's at an 8.2. If we do decide to mark up the price, the pattern that has existed for a few years now would be for the price to rise until this forward PE is about 20-25% higher at around double digits. By the way, just look up at what the PE is. Yes, that's right. This does mean that earnings are expected to more than double in the next few months. And that is more or less all you need to know about Grupo Cibest, is that it is a fintech company disguised as a legacy old school bank. I can't tell you how many people are continuously getting shocked by realizing that this company has triple-digit growth rates across multiple divisions and almost limitless addressable markets. And so hopefully the nice controlled rally continues. It really has just been an excellent stock. The third company, Mercury Corp, and the journey we're going through today. I mean, look at this beautiful markup. What began around $55-ish a share, around this range, has spent plenty of time above $80, even above $90. Why don't we look together at what the exact trades we made were and how it turned out for us? The rally began in April, but it was not until this calm period during June and early July that our artificial intelligence started to chomp at the bits, aggressively scouting this out for an opportunity to start a feeler position. The opportunity did eventually arise at a very favorable risk-reward ratio on the midpoint of July 15th. Pretty much we had this green day which betrayed to us the market's intent to begin rising again. And then we were able to the very next day acquire our feeler position. That feeler position did do its thing all the way until September 5th, where again we had a big green bar indicating to us that demand was demanding and we were able to acquire shares the very next day. Pulling back the chart here, you can actually see this was days before a dividend day, which definitely factored into our appetite there. A bit of a riskier trade than we would like to do as a default baseline. But when we factored in the potential opportunity to collect this dividend with additional shares, that did sort of balance out the risk reward just enough for us to make a pretty okay scaling up. And then some, because the day right before the dividend, very thinly traded day, we actually pretty much doubled the size of our position from the first two trades. That dividend did arrive nicely safe and sound, no real issues on that day. In fact, the price actually jumped up a little bit, which gave us some confidence to continue increasing our position, albeit at a much slower pace, on the 15th of September. And then, on the 16th, a surprise gap down. Price touches the 20 SMA, but luckily gets pushed back up. I think the day closed actually above the SMA. And so all of this was fine. A little scary that day, but not really a threat. So we let the position grow until September 24th, another very thinly traded day. We were there to take advantage of the thin trading in order to add a little bit more at a pretty reasonable risk reward right at the market open. Entering October, there was a pretty exciting push up here. What at the time we didn't realize was eventually going to be the start of significant volatility. But we didn't know that in real time. And so on October 7th, right here, 2 days after a very sizable green bar, we felt the push down was not really going to threaten much. And so we massively increased our position, really ramped it up at this point. In fact, we could not get enough that the very next day we came back, once again ramping up our position. These 2 days here represented by far more than 50% of what was ultimately our entire peak position, which did, as you can imagine, sting when 2 days later we aggressively closed below the 20 SMA. We were looking at this. If we had not ramped up just up here, we probably could have held this for longer, maybe even throughout this whole pullback. But because we had just massively increased our risk exposure, we were forced to liquidate right here, ultimately reducing our risk reward return to only 1.7 R. Luckily, 1.7 is still, fairly decent. I'll still take that. But it is less than half what is currently our average 4.4 expected return, meaning that those 2 days there were fundamentally a pretty obvious mistake. But again, we made those decisions in real time. I still don't think I would have pushed that away. If this pullback had not happened, you can even see how freaking clunky it looks on this chart. If this disorganized pullback had not happened, the benefit, the upside of that maneuver certainly would have outplayed what was, in our case, the downside. A 1.7R trade totally seems like a decent downside to me for the opportunity that was available to us, but it didn't work out. Since selling here in October, I gotta be honest, we missed this entire bounce back, and the volatility is just not been helping us out here. It kind of feels like we're back in a late 2023, early 2024 era for this. The company itself is a massive profit machine, and I'm sure the earnings are going to continue to steamroll expectations. However, the AI simply was just not convinced at any point since October. This wheeling and dealing cowboy nature of this chart kind of has us lowering our appetite for Mercury General, at least until it starts to behave more gentlemanly. In fact, let me pull back Grupo Cibest. Look how lovely this chart is. This is a gentleman's stock. And so when we have opportunities like Grupo Cibest in the financial sector, Mercury General is not really holding up to the high bar that we're seeking for. Still an amazing value stock, but not the very peak of amazing, which we like to search for at Sage Seeds Capital. Well, there we have it on a pretty mixed day in the market where, surprise, surprise, the tech sectors, especially the semiconductors, are experiencing their usual volatility bias towards the biggest of the biggest names. We've just zoomed in on 3 of what I consider the most undervalued and interesting journeys in the stock market. Please hit like and subscribe if you enjoyed this session. As you notice, this technical series is very light on the economics and business analysis. But don't you worry, that's why we have the deep dive series where we go all in on some very fascinating business analysis. I think in pretty much every episode, there is something amazing being revealed. I also like to wish any casual or longtime viewers of our channel a very happy 2026, happy new year. I was fortunate to be able to take a quite enjoyable break, see some extended family over the holidays. But because I'm grateful for that experience, I'm especially pressed to remember everyone who might not have had the same opportunity this year. I hope you get that opportunity some point in the future, or even if you don't, that whatever blessings you have in your life genuinely give you that warm, happy sensation that I believe every human deserves to feel. Well, I'll see you in 2 weeks if you want to see the deep dive series. Otherwise, I'll see you next month for the next technical video. All the best and see you, Sage Seeds.